All right, well, welcome everyone to a frickin' frack of money and real estate. My name's Dan Wingard. I guess I go as frack. That is a frack of the frick, isn't it not?
That's correct. And I am Frick. Wait, who am I? Wait, I'm Frick.
Yeah, we ask this often of ourselves, who am I? And then we go into this deep conversation and then everyone leaves. But we're not going to do that today because we have Owen Jacobsen, who has successfully created a lifestyle and has done that through utilizing money and real estate in a real positive way. And Owen, why don't you just, instead of me doing a long, drawn out hour-long introduction of how amazing you are, if you could just tell us a little bit about yourself.
All right. Well, I that's a loaded question. I started a residential real estate back in 2017, so I haven't really been in residential real estate for a long time, but I have been involved in investing in real estate for since the early 90s. So basically, my story is when I was in my 20s, just graduating from college, I wanted to be involved in multi-housing. Back then, I thought that would be the greatest thing in the world to own apartments. And I think reading books like Rich Dad, Poor Dad, Millionaire Next Door, all those books really just ruined me. And so early 90s and 93, I bought a house, brand new house, paid it off in 4 years, sold that, bought 3 acres in a
Wait a
house, which I
second.
turned into a duplex up in Sammamish.
Can I just stop you for a second? I bought a house. I paid
Yeah.
it off. I think you just jumped past like most people. What in the heck? How is that even possible? Mike, I know you were going to ask that, but I thought I'd jump in.
Well, I grew up in a really conservative, financially conservative house with my parents and stuff like that. I worked actually in Costco back in the day when my direct supervisor was Craig Jelinek, who's now the CEO. And basically, I had agreed with my wife then that if we bought a brand new house, which we had just been married, that we would pay it off in 4 or 5 years. And we both worked at Costco. So I said, okay, well, let's do it. So we did that. And then, of course, once you get to the end of that, you lose all of your deductions, all those things. And plus, my goal wasn't just to have a house paid for. It was to use it as capital for what I was going to do next.
Okay,
And
so I wanted.
we
I'm
paid it
sorry
off, or just
I'm sorry to keep interrupting, but was it Costco cases of ramen for 4 years? What's going on here?
I worked actually right out of high school. I went to the Kirkland warehouse, worked there for a few years, and then I went over to the buying office, and I was worked in automotive, and then in seasonal, and and basically worked on the buying level.
But what I'm trying to get to is 4 years of paying a house off. Did you just eat top ramen like cases?
Oh no, not at all. No, it's I broke it down to how we could do this, and we made huge balloon payments and just paid it off. But back then, this was a 4-bedroom, 3-bath, brand new house, which I bought for 149,000 too. So it was much more doable. And with the salaries back then, housing wasn't as crazy as it is now. So
Got it. Okay, thanks.
so
I appreciate you slowing down for me.
Gotcha. Sorry about that. Okay. So anyway, so I sold that house. I bought another house over in Sammamish because I knew I bought it over on 244th because I knew exactly what was going to happen in that area before they became a city. 244th was going to obviously be the secondary artery that goes into Sammamish aside from Sahali. But I found a piece of land, 3 acres, had a house in it, huge house, 3,500 square foot. Turned into a duplex, lived in the downstairs, rented the upstairs, and worked on paying that down. And I was going to actually develop that myself, the land there, and then sell that and buy other multi-housing. But instead, I got an offer from a developer that I couldn't refuse. I bought it, I sold it for 5 times what I paid for it. And then I took that money that's when I really started getting involved in buying houses. But my reason for getting getting all that capital and such, is because at that point I was still committed to buying like a fourplex, sixplex apartment, kind of keep working myself up. And it was when I got to the point of where I was going to sell the property and reinvest that I started getting involved with some other people, some other investors, the bigger pockets kind of guys. And as I began to talk with them and share my ideas, and they share their ideas, I began to really rethink my strategy, because number one, you're putting all your eggs in one basket when you buy an apartment or you buy multi-housing. Also too, I had never thought about buying something that I couldn't drive to. And as I began to think about this, I began to think about how I could start to build some kind of portfolio, and how I could do this one brick at a time or one house at a time and stuff like that. I began to realize that there are areas in the U.S. that you can invest in that have huge cap rates, that you can have a huge return on your investment. You don't need to buy a big 4, 6, or 8plex or apartment, to get started. You can actually start building your investment one house or one brick at a time. And especially one friend I had that had a strong influence, he was doing this. He was doing it in Indianapolis though. And so that's where I got started. I thought, well, you know what, I'll just get started. I'll start buying a few houses there. And so I ended up buying up to 8. I bought 8 houses in Indianapolis, just buying and taking some of the money that I'd made through my investments. And it was going really well. And then I heard about Memphis, and I thought, God, Memphis sounds really good, almost too good to be true, as far as, just property taxes, how friendly the state is to landlords, just that part of the U.S. And so I thought, well, I'm going to try Memphis. And I always want to kind of look ahead, the curve to see where things are at. And I got to say, everything I bought in Memphis was gold. I could put houses on a wall, any random house, throw darts at it, and it would be good. There are certain areas, obviously, you don't buy just because it's just not a smart investment. But more or less, there's more places you can than can't there. And with FedEx and everything that goes in and out of the U.S. pretty much goes through Memphis. And I don't think online shopping is going to go, it's going to disappear anytime soon, because everything basic comes in and out of the U.S. just lands right through there. So Nike has international headquarters there for international shipping. FedEx, obviously, that's their main hub. And there's a lot of huge infrastructure. The state of Tennessee is incredibly favorable towards landlords. People in Tennessee and in that area are amazing. Whereas we have a state here where the governor, encourages tenants to not pay their rent, if they're having hardship. There, it's a grittier lifestyle. People, if they're not making ends meet with their job, or if they lose their job, they go down to Kroger's, which makes a little bit less because the cost of living is different out there. And they just grit it through. And if they, for whatever reason, can't afford to live there, they graciously let the landlord know, and someone else. I usually have 4 or 5 people waiting to get into the houses that if they're ever vacated. So I always call my investments, especially in Memphis, recession proof, because even the hardest times, that's where I made all my money, because real estate was really affordable. We had a lot of good opportunity there, and the people, we don't have the same kind of situations we have out here in the Northwest. So
Yeah, well, the good thing here is, I mean, we all 3 of us are fortunate to be in the real estate business, and so
yes.
it's been through the pandemic and everything, we're fortunate to continue forward. I know a lot of folks are struggling, but Mike, do you have any questions as far as just the financial aspect of maybe even what you're seeing and what you deal with when somebody gets to a certain level of houses? What does that look like on the financial side?
Well, I think just listening to Owen's story, it's just I was deep in it. I was listening to what, how he built his, we'll call it empire, right? And just starting and just chopping away at it. And I think just doing the research too, just listening to Owen talk about the research that now is, I'm sure at the time was more of, you had to have some contacts, you had to do a little bit more digging, whereas now you can probably online and understanding demographics and looking at the cap and all of those different things. There's so much more information online now to be an investor and arm yourself with information, not only from the website and those avenues, but really, like you're talking, having Owen, who is an amazing point of reference right now today, listening to him and how he does it, but getting that advice as well. Dan, myself are here to give advice, but I think just as you go forward, can you talk about, Owen, like what you did from the financial side on what was the bank's role? How did you leverage your properties? I think just having some real world talk about that. And then, I can maybe add, some tidbits on what I've seen in the marketplace today and just kind of go from there. I'd really like to hear how you leverage each step and what that looked like.
Oh, yeah, it's a good question. Well, when you approach, investing in properties, such like I am, you have to kind of know what your model is and what you want to do. And for me, when you're out here in the Northwest, your model pretty much has to be based on appreciation. You're not going to get much of a return on your investment if you get a 5% cap rate. You're doing all right. But if you have to, which you probably will have to borrow money, then there goes pretty much any profit. So you're starting off your investment right away, in a loss. Now over long term, you will make much more in appreciation. But the problem with appreciation is that, well, what do you do with it once you make all that money? Well, you have to, you only cash in once you sell it. You have some taxes you need to pay on that, or you 1031 it, roll into something else, which then you have to buy something of equal value or greater. So I bought in onto the model of cash flow. I figure, well, you know what, I'm always gonna, as long as I can make a little bit of appreciation on my properties, so that you never want to make negative appreciation. But the biggest thing is that I get return on my investment. I think that was a great thing. When you get started, it's kind of like these, it's like an exponential curve. It starts super slow, right? I meet with Microsofters all the time, and they, because they hear what I'm saying, and although they're not as comfortable buying something out of state, they want to hear how I do it. But I would say, well, just start with one house, right? I break my portfolio into A, B, and C. I got C properties that are kind of your middle to lower middle class, my B properties, which are my middle to maybe middle upper class, and my A's, which are a strong middle class. But I think you buy a C class, and you can buy a C class house for about, 50,000 maybe, which is cheap. You can't buy anything around here for 50,000. I actually, one person that I actually bought, an investor, he was over leveraged, bought 4 of his houses at just a fire sale. And so the cheapest house I ever bought was $32,000, but the rent on that thing was $800 a month.
Wow.
Which is just insane. Yeah. I know, exactly. And so when I talk about cash flow, I'm talking about a real thing. I'm talking about crazy cash flow.
Yeah, and you were being generous with a 5 cap rate here. We're not even seeing
that. Yeah, exactly. In the Northwest, if you find 5, it's probably down in Tacoma or further south or further north. But yeah, and here, if I bought a 3-bedroom, 2-bath Rambler, which if I could buy it for 500,000, I would be lucky. Kind of the scale of what I'm doing down there, it's like I would be buying a 500,000 3-bedroom, 2-bath Rambler, but renting it out for 3,000 to 4,000 a month.
Got it.
So that's kind of scale of what I do in Memphis and Indianapolis.
Yeah.
But when someone gets involved, I think that any person, especially in this area, because the great thing about doing that, selling real estate in the Northwest, is the housing prices are obviously incredible. They're huge. They're so the commissions on that and such are very big. We have an opportunity. Everybody has an opportunity to make a lot of money here in the Northwest, whether you work for Microsoft or Amazon, Facebook, anywhere, because the cost of living is so expensive here. But then I don't like investing personally because of my model in here, because I just wouldn't make any money. I like taking that money then and investing in these other states that I can have a huge return on my money. And so, and I'm actually teaching my boys this right now. My 18-year-old will turn 19 here in November. And I've already talked about this with each one of my boys. Basically, they want to partner with me, and they'll partner with me in real estate. And I'm going to teach them hands-on how to how to make money in real estate in the Northwest, but then take that money, reinvest it in an area that gives you a high cap rate, and build his, and we'll start building his own portfolio, and starting that out strong. I had to think about what I want could hand my voice, something that would have changed me. That I, and I thought, gosh, if I had someone like myself go back at my 19-year-old version of myself and mentor me in this, I mean, that would have been 20 years of course, it's different when you learn it, right? And there's a lot much more value sometimes when you learn something because you become intuitive in it. But, for them to teach them when they're young, how you do this, hands-on, go back there, you meet the property managers, do all the work, hands-on, figure it out, and then, let them run loose with it. So
That's fantastic. So what would you recommend for somebody that's just that this is kind of sparking something for them? What would be some of the first steps or resources? You mentioned a couple really good foundational books: Rich Dad Poor Dad, Millionaire Next Door. What are some other resources? And Bigger Pockets, biggerpockets.com is
Bigger Pockets is huge, and I know it sounds crazy because it's just podcasts, but I mean, they have such a variety. They have so many, archived in there that you can listen to, and I think they really hit home because they're not. It's not just a general overview. I think you can really get a lot of value for free just by going on, and listening to Bigger Pockets. I think, the one thing I do is I network a lot. I'm a hands-on networker, so I build relationships, face-to-face relationships with people. I ask a lot of questions. And I love giving a lot of feedback back and forth. That's where I've learned most of my stuff is through, honestly, what sparked my overall big, 30,000 feet, above looking at, the scope of things vision was those books like, Rich Dad, Poor Dad. But what gave me the tools, all the how-tos and all the little, tricks to the trade were all my relationships I had with people and like Bigger Pockets and podcasts and such.
what do you say to those folks that are just they're not pulling the trigger? I know I've been to a lot of networking groups around investing, and what would you say? Maybe less than 10% actually take action? Well,
Yeah. Oh, absolutely. No. And well, especially with what I do. I mean, it's funny whenever I meet or talk with someone, they just don't believe that it's possible from, and these are people that make very good incomes from whatever they do, Microsoft or whatever. And they don't believe that they can, make a profit, own, income properties, investment properties, just because they live in this area. They know how expensive it is. They know that they would have to borrow money. They know they can just see all the numbers in front of them and realize, you know what, if I buy this, I'm going to be taking a loss for probably the next decade till finally I start breaking even when the rents catch up with, the expenses of what it costs to own investment, properties here in the Northwest. But when I say, hey, well, you know what, I mean, I know you don't like driving, I know you don't like owning something you can't drive by, but can you imagine, I mean, buying a house for the price of a car? And I mean, the risk is very low. You have property management, honestly too, this is another thing too. If you own something around here, I really like the out of sight, out of mind thing. Because I think as I own properties here in the Northwest, I couldn't help but go buy them. I couldn't help but actually manage them myself. And there's a lot of added extra stress when you're driving by, when you're managing your own things. You're just always thinking in the back of your head, oh, I got to do this, I got to do that, I got to do that. I have 28 properties now. And I can tell you that I trust, I mean, the property management companies, because I have really good ones out there. They do a great job. They do all the paperwork. They only charge an 8%. And I can do that, 8% of what comes in, because I make such a high cap rate. I make way more on a property, even with them managing and all that, with them managing it, than I would if I managed my own property and had my own stress. And honestly, let's be honest, you put a cap on or a lid on your ability to own many different properties when you're doing it all yourself. But when you're able, the model that I have is scalable, whether I do 28 houses or whether I do 280 houses, because all that paperwork that my property management, all the stuff they do, all the work they do, all the, at the end of the year, because right now it's going to be tax season. I take all that stuff and I send it straight to my CPA. My CPA hands all this thing. And that's another thing too, is that this income by and large is tax free because we have a depreciation schedule that we do for 7 to 9 years. So I own these properties. I treat them just like investments. I own them for until we depreciate it out. Then I sell them, I 1031 them, and I buy new ones.
That's powerful.
I just have a really quick question, Owen. And if you could give advice today, actionable advice to anyone listening that is thinking this is something that they would like to get into and don't know exactly, you've given a lot of great scenarios and informational pieces, but like an actionable, hey, this is a 5 steps of what you should do today, right now, if you want to get your money into the market, whether it's here or somewhere else. And I think you've given great credence to somewhere else getting into the market for 50,000, 35,000, whatever that number is. What is some actionable steps that today you would give the advice? You talked about your son. Hey, here's what you would do. What does that look like?
The first thing I do is just start looking properties back there, just to kind of have fun with it, right? I would get hooked up with a broker out there, just kind of learn about the area, just kind of go and look at some of the houses online, because that's a great thing about today. I mean, you can go Google Earth. I don't even go back there anymore when I look at houses. I mean, when before you went out there and you kind of learn the lay of the land, but now I can Google Earth a neighborhood. I know which neighborhoods I don't want to buy, which ones I do, but like I said, majority of the neighborhoods are great. So I'll just, you can just drive through a neighborhood on Google Earth, and then you just look at the numbers on the house. You have the inspection. The inspection tells you the condition of the house, and if it's a good deal, you pull the trigger, and the great thing is it's a diversification of risk, because if I have, with 28 houses, if I have one house that didn't do so well, maybe I had a structural problem, maybe a water heater went out or something like that. I have 27 other houses that are doing great. If I had an apartment complex and I have like a flood or if there was a fire or whatever, the economy goes bad, all my eggs are in that basket, and I could be screwed. So, I mean, that's a great thing, is that all these houses, they're in the region, but they don't impact each other as much. And so, and again, that's another reason why I do the A, B, and C houses, because the economy affects each one of those different, segments differently. But I would say I would find a broker, or, talk with someone who knows that area, and just start looking at houses and looking at the spreadsheets of the investment on that. And honestly, I would say, I mean, if you, I would just go for it. I would just say, hey, buy a house for, buy a C-level house, buy a $50,000 house, and borrow money on it, put down what, 10,000, 15,000 down on it. And just try it out, But the only thing I always warn people, it's like chips and salsa. It's addicting. It's like a real life game of Monopoly. Once you get started, you better warn your wife or your spouse or whoever whatever, that you're going to start getting sucked in, because you're going to see the return on your investment. You're like, this is nuts. Why was I putting money in stocks or doing this other stuff when, I mean, the thing is that, I mean, and I'm not going to sell short stocks, but I feel so much more in control with what I do now. And I do have money in, 401ks and stocks like that. But this is one of those things where I feel like with stocks, it's like a roulette wheel, right? You kind of gamble because you don't really know, but this thing is steady. I mean, I get appreciation. I depreciate, the tax, all the taxes and stuff. I get all I get the great cap rates. If I had a stock that would, produce 25, 30% annually, you'd be staying in line saying, and then I could say it with almost certainty, that's what it's going to return. You'd be, where can I sign up for this thing? Well, that's what I do all day long, with these houses.
That's
so
great.
I would say the first thing, find a broker, or even just go online. You can go online and just look through if you want to, without even a broker, just to kind of take a peek of what's out there. And then, just for fun, just as a hobby, try a house, just try it out. And if you need advice on, property management companies, there's a lot of different resources, and because they manage it for you, they deal with everything for you. And just learn from one house. But the next thing you'll probably be buying 2 and 3, and you'll be where I'm at eventually. So
like chips and salsa.
That's right.
I love that.
Yep.
Thank you.
That's great. So what would you say to you? Now you're selling real estate. You're rubbing shoulders with all these big shots that are making a lot of money. what would you say to them that maybe encourage them to go this direction versus increasing their lifestyle to match their income?
Well, this is what I'm teaching my boys, and this is what I've already had these conversations with them. I told them, I said, here's, if you're going to do this with me, this is the way you're going to do it. And trust me, it'll change your life. Is I will be teaching my boys how to live off a residual. And so what we'll be doing is we'll be starting to buy houses, and they'll be keeping, and initially they're gonna have to keep their, their lifestyle. We're going to be making a lot of money together, but they're going to be living a very modest lifestyle to start off with, because they're going to be investing the majority, if not all of it, into these houses. And once they start to getting to a point where their portfolio, then I'll say, well, okay, so you want to increase your level of or standard of living. Don't pull from your income, pull from your residual. So basically, then what you do, the more houses you buy, and the better you get yourself set up, your residuals start increasing and increasing. And then, so you keep feeding, keep buying those houses, and you're giving yourself a raise slowly but surely, little bits at a time. Pretty soon you can do whatever you want in life. You can choose whatever career. If you don't want to do real estate, you can do something else, and you'll always have this huge base income. You'll never have to think about really what you make again, because that income will be coming in very steadily. Now, I will say that what we're doing will probably ruin them, and they will want to do this for the rest of their life and just volunteer in other areas that they thought would be their career because they can. But that's what I would say for any person in real estate. You've been so blessed with an area around here that does, provide a very comfortable living. But we also know that the economy, the real estate market is something that fluctuates a lot. It doesn't stay, strong forever. And of course, you can put money in the bank and plan for a rainy day, or you can recreate your whole, kind of strategy in life. Invest and build and buy and live off residual, and then you have a steady income, for the rest of your life. Honestly, you can live life on your own terms. You can take a year off if you want, and do things that you've never done before, then return back. You can do whatever, you don't have to, be a slave to your job. Your job becomes something you enjoy to do, something that's fun, something that actually, you can add to provide, that can provide a ends to a means, or means to an end, by buying more real estate and then living off the residual. So that's the greatest thing I can take away from this, is that, I never feel the pressure of having to work. I work because I want to work.
That's awesome. I think that's a message for everyone, especially in this area, for our brokers. And everyone has this opportunity to set themselves up. And Mike, Frick, um, you know, getting people on path for that first house, that first investment, regardless of where they are. If they're renting, anything, anyone can start from where they are and have a vision and move forward. And I love, Owen, that you're here sharing your knowledge and wisdom. And I just want you to know, and another reason you're here is you just come from such a heart of serving. And I would say that as we get this out there, and it's really unfortunate this isn't live because there would have been more interaction, but we are going to put this out there. And myself, Mike, anything we can do to help you get on path to creating the freedom to really being an impact in your community, where nothing can get in the way of you doing, following your purpose. And I think this is a great vehicle to do that. And I know that we all have that heart. So, Owen, is there anything that you'd like to just share or leave folks with today?
No, I think what you summed up. I mean, that really puts it in a nutshell as far as what I do and why I do. I mean, it's, there's, you can make all the money in the world, but it still feel like you're spending most of your time doing things that you have to do because it's your job. I think there's a whole level of freedom, a whole level of collateral. It's time collateral, right? I mean, that you get to spend. You get to live life intentionally. You get to spend it with the people you want to. You don't feel like you have to do this or have to do that. You live life on your own terms. And quite honestly, everyone in this, in this brokerage here or anywhere around here, honestly, could I mean, even Microsoft, all these guys could, I mean, 3, 4, 5 years, they could retire. They could do the same thing I'm doing very easily and live life on their own terms if they were just very intentional about what they did. So.
Awesome. Awesome. Frick, anything you'd like to share before we wrap it up?
Yeah, I think just real briefly, just to echo what Dan and Owen, what you were, talking about here is, I think that's why we do this. Is I had a conversation today with some first-time home buyers and just really talk to them about what real estate can do for them. And I think just to touch on what Owen, in getting started, and Owen was talking about that, is that this life is nonlinear. And so let's, we do the research, we're armed with information, and what we do with that information is just as important, right? Good information. And I think that's what we talk about, is doing the next indicator right thing. Real estate is an avenue for generational wealth. Owen, you were talking about that with your children, and you're like, gosh, I wish somebody would have been able to walk me through this. And there's, yes, tons of importance in having the path and picking up the knowledge along the way, but to have someone come alongside you and say, hey, here's what it is. I've set the table, and then really be able to provide that to them, not only if it's family, but also with your clientele. And as I said, I was really have a great conversation this morning with some first-time home buyers, just speaking to that and what their path looks like into generational wealth. And when I say generational wealth, I mean holistic wealth, well-being, how we live our lives together. And so I think that's that heart. Talking about it is one thing, but living it out. We live it out, and that's what we want to do here. And so I appreciate you taking time, Owen. I really learned a lot today. And I think that's the biggest thing in this life, is that we're all learners, and we can learn from each other and grow from each other. And so I just really appreciate you.
Hey, Mike, if I can just say one last thing, you sparked something. Another opportunity that people have, of course, when they sell a house, is that they have all this. They have some extra, obviously, some money they made off of the house. That's where a lot of conversations come in. You have people that have owned their house for a while. They've had some appreciation. And a lot of times they're saying, well, I just want to take all that money that I've made off that last house and pay down my future house here. And that's not a bad idea, but you also could consider taking some of that money and investing it in something, getting yourself started to something like this that could provide some financial freedom as well.
Absolutely. Great point. Yeah. Dan, you're on mute.
That was so good too. I was just saying, such a great point as far as pulling out equity. If you have instead of having it sitting there, check in with Owen, find out what the value is of your property, and just see what you can do with that equity to start getting that to work for you. So thanks so much, guys. This has really been a privilege. I know we had a lot of technical difficulties, and I know we'll get this out there, and that all of us are available to, if any of you have any questions, post it here on the Frickin' Frack, or reach out to us, and we'll have our information here posted on the site. So thanks again, guys. Owen, just fantastic. Really a great message for everyone. And Frick, as always, you're frickin' awesome.
Thanks, Fracktastic. You're amazing. Thanks, Owen. Appreciate you.
Thank you.
You guys.
Okay.